Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, another parabolic tech move as Snowflake surges after its earnings report. We debate that space, whether too many names now are showing signs of froth. Joining me for the hour today, Josh Brown, Malcolm Ethridge, Jim Leventhal. We'll check the markets. That news that Axios had earlier of a potential deal between the U.S. and Iran that needs the president's signing off on has moved the market, not by leaps and bounds, but nonetheless, we're green across the board. But I do want to focus on this parabolic tech stock du jour. It's Snowflake, okay? They got the Amazon deal, and the stock is just off to the races. Nobody owns it here. Kudos to Stephanie Link for making the case repeatedly for it. By the way, Brad Gerstner, who owns a lot of it personally, no longer in his public fund, is going to join us in the next block to talk about this and some more stuff that you'll want to hear about, too. But I don't care that nobody owns it here because it's indicative, Josh, of what happens in this market when you got a red hot name and you get a red hot beat.
Yeah, I think this is very good for beyond just Snowflake itself and Snowflake shareholders. I think this is good for sentiment because we've basically had a one-way trade in a lot of technology stocks that were deemed to be, for some reason or other, on the wrong side of the AI trend. And Snowflake kind of got lumped into that, where they said it's too expensive and it's unclear what their exact position is going to be in this ecosystem. Everybody understands why it's a bull market for what Snowflake does, but there were questions around it because it's lumped in with all these software stocks. As a result, money comes out of the ETF. This is one of the names that gets sold. People aren't thinking twice. They're shooting first, asking questions later. And then all of a sudden they come out and they say, not only are we alive, we are doing better than ever, and we have this partnership with one of the top three names in AI and data centers, Amazon. And look, now it's time for you to actually think about the future for Snowflake and not lump us in with all of these other potential disruptees. I think stock by stock, you could see that happen with other names, and I think that's why it's such a healthy development for investors, whether they own the stock or not.
I mean, the market, Malcolm, is judging this one as a beneficiary of this AI boom, an enabler of these models rather than a disrupted by these models, which obviously brings me to the fact that Salesforce is not trading like this one is. Stock was red after earnings. We'll just mention it. Kramer was bullish on it this morning, said he would buy it. I think when it was like 170 something, 173, 174, 172. So stock did come off the lows. And you can see the move, too, when Jim was talking about it on the show this morning. But nonetheless, I mean, a 30-something% move. Was the market really that offsides on what Snowflake's got going on?
Yes, it was. And I say that for two reasons. One, I think Snowflake is validating, to your point about Salesforce, the hypothesis that what the market was missing is that there's a difference between a consumption-based model and a per-user model when it comes to software. Snowflake is a data aggregator or a data warehouse that has done the smart thing of deciding to be Switzerland and sort of sit in between all the different model providers and not necessarily pick a favorite, which we're starting to see also has some benefits for the companies that chose to go that route. So in this case, we're no longer worried about is software going to be completely disrupted by AI? We're worried about which software names are going to be disrupted by AI.
Yeah, for sure.
And I think what Snowflake is proving is that it doesn't really matter who the winner is, whether it's Anthropic, OpenAI, or someone else to be named later. They're going to have the opportunity because everyone's chasing compute wherever they can get it. What I mean by that is the different data storage platforms that exist out there, all the different neo clouds that exist out there. Companies are sending their data to wherever they can find compute, which means then that it's kind of fragmented, and a company like a Snowflake that can bring all that together and give you access to it in one centralized place is proving that it's valid, it's going to survive the SaaS apocalypse. And I think that's why we're seeing recognition that, okay, we probably got offsides on this one. Let's pile back in. But I'll say one more thing to that. Look out for Databricks and the widely anticipated IPO that comes from that, because they also play in this same sandbox.
Yeah, and that's, as Kramer was also saying this morning, they're coming for them, as them being Databricks. So I'll turn to you, Farmer Jim, and move from software to chips. Speaking of parabolic moves in the market that need to be addressed, we now know the SMH is up 64% since the March low. The Philadelphia Semiconductor Index, better known as the SOX, up 79% year to date. It is the best 100-day period to start a year ever. That rally, pointed out by CNBC, check out our website today, becomes the most hated in history. Okay, how do they measure that? Oliver Rennick authoring that piece for us as he watches the options market. So he sees the kind of buying that is happening. Open interest in put contracts on the VanEck Semiconductor ETF, that's the SMH, have surged the past 2 months to just under 1.7 million. That's the most ever, okay? Going back to the fund's launch in 2011. Thus, it's hated. People are worried, although, remember I said yesterday on the show that, somebody had told me, a well-known investor, that they were watching this Micron move with astonishment like everybody else and saying, yeah, but I'm still buying calls.
Well, look, the put-call ratio is traditionally a contraindicator. When it goes high, that usually means there's more gains to come. I do think that as much as we're all stock pickers, right now we probably have to be parabola pickers at this point in time, meaning you have to decide where a particular name is on its parabola. Now, I get that Micron, just as an example, at 10 times forward earnings looks cheap, but I don't think this is the time that I would be picking a position in Micron. I think there are other semiconductor names that you can select. I've recently trimmed Qualcomm, but NVIDIA, if you look at that, I don't even think that's a parabola anymore. It was several years ago. Now it's just a nicely appreciating bellwether leader in the space. And
There are some too, by the way, who will take issue with your statement of you can look at Micron at 10 times and say, well, it looks cheap.
Yeah.
Not historically how
No, that's
memory has traded. That's
my point. I'm sorry I didn't make it clear that it's actually kind of expensive for something that has been this cyclical. NVIDIA has a difference that it's more of a specialty manufacturer, far more. It's not just GPUs. Now it's CPUs. It's got the coding software on top of it. So this isn't as commoditized as something like Micron, which is highly commoditized, enjoying the rally, good for Micron. But longtime investors know that a cyclical stock like Micron will eventually give up some of these gains. Maybe there are more to come, but it's not for me. I do think that there are parabolas that you can buy and that there are parabolas that maybe are a little bit too mature at this point.
I don't know. I mean, JP Morgan's Retail Radar plays well off the CNBC story by Oliver that, yes, it may be hated by the volume of put buying, but there's still little evidence of profit taking in the memory trade at large. Price targets continue to go up. What have we had, about $1,500 a couple times this week or thereabout, ballpark. D.A. Davidson, the latest to join that party, $1,500 from $1,000. Wow. Mizuho raises the price target for Micron, SanDisk, ARM on semi. They have Micron at $1,150. So we're in, getting up there. Marvell was another one, Josh, on the list today, which has ownership from Joe Terranova and Stephanie Link. That stock was lower. They had a good guide. But, if your guide doesn't look like a space shuttle, you're going to not have a snowflake-like move in the market. That's still a good one for a stock that's ripped.
I think one of the most interesting aspects of the bull market this year is not how many stocks have gone up 100%. Of course, there are many. But the surprise, even amongst the experts. I had Dr. Ankur Crawford, who is a materials scientist turned money manager at Alger, where she manages growth portfolio.
Frequently on Closing Bell, by the way.
Yeah, so
Nebius, shout out to her. Stock was up 10%.
All right, I'm more friends with her than you are. Relax.
I'm just saying. I'm just calling her out for making a great call in Nebius. But I digress. Go ahead.
So Encore explained. Even the
Is she available today, 3:00? By the way, Kev.
Let's check on that in a minute. Even the people that live in the semiconductor world and understand not only the investment rationale for these stocks, but the science, they all had memory, for example, or companies like Marvell. They had this list of stocks where they looked at this data center build out and they said, surely there's going to be some massive surge of demand for these components. In some cases, they bought the stocks and then nobody else showed up and they said, I must be wrong. Maybe memory is not going to be that important to AI. the stocks aren't moving. And then all of a sudden, these things take off out of nowhere, go up 3, 4, 500%. That's how difficult it is to be investing at the dawn of a new infrastructure cycle. Even the experts aren't 100% sure who's going to play where. And then by the time the market catches up, we have these supply imbalances and we have these shocks, and you could put Snowflake right into the mix. This is not a stock up casually 10% after reporting a good quarter. It's up 40% because people were taken aback by how important what they do is to this proliferation of large language models.
Could I say, though, you asked the question, you pointed out that there hasn't been any profit taking yet, and we're getting this stampede of upgrades, updates, and price targets. Maybe this is the place where we should be seeing some profit taking. Because when you look at a Micron up from $500 billion to $1 trillion in market cap in just 50 days or whatever it is.
Yeah, 48.
That is absurd.
I know, but look at what was the date that the DRAM ETF launched? Can we guys back in the control room? Can you somebody help me out on that?
It's in February or March.
Okay, so to some,
yes,
I bring it up because to some, that was a moment that, okay, did that mark a local, as they say, peak in the stock? And some were suggesting, well, maybe that means that you should take some profits there. The stock from that day, I mean, Micron and the DRAM ETF is
does the dog wag the tail, though, or does the tail wag the dog?
Well, that's why people are afraid to take profits too early in what is such a booming stock environment.
I'm not suggesting that it's time to head for the exits. It's time to ring the register completely and say, I'm out of here. I'm talking about trimming the position to a point where you feel like, as you took this ride on this parabolic move, you actually have something to show for it when it's all said and done. Because what we are also discounting, we get excited about the RPOs, we get excited about everything else. What we're missing out on the fact is it takes 3, 4, 5 years for these companies to actually build out the physical infrastructure necessary to roll out these solutions to catch up to the demand where it is. That's why chips historically are so cyclical. And so we're treating this as if all of a sudden these companies are going to be able to meet all of the demand that we're learning now exists overnight. And that just isn't the case. So I think realistically, this is a good place to be taking some profits just to make sure that when it's all said and done, you got something to show for taking the ride.
Josh makes a great point that nobody knows. Mm-hmm. It's a trigger-happy market in certain things, on both up and down. No one truly knows what's being overbought, what's being overordered, what's going to be completely disintermediated by AI, what is not. I go back to the fact that both Snow and CRM were sort of knocked on their backs for a while until the market's now trying to figure out, okay, maybe Snow's going to be just great. I look at cyber in sort of the same way, and that a lot of the cyber stocks that day of the Anthropic announcement, right, rolled over. Mm-hmm. And now they've slowly started running again, right? There it is. They fall down, feet get moving again, and they take off.
The thing that you can count on is overreaction. So that's, I don't know how you include that in the way that you're investing right now, but it should be in the back of your head. Not every 30% fall in a stock after reporting earnings is necessarily going to stick, and vice versa. Not every parabolic move to the upside is necessarily the checkered flag. Like you're going to have to just remember how offsides people are being caught,
right? Even
in giant, well-known companies. They're shocked.
Love the segue. It's so perfect back to Malcolm, Zscaler.
Yes.
Right? Worst day ever yesterday. The stock was just obliterated yesterday. You bought it. Tell me why.
Complete overreaction. This reminds me, I know it's not the same thing, but this reminds me of the outage event that CrowdStrike experienced when everyone decided to sell the stock all at once. Shares fell horribly. And then we look and it slowly but surely chugged back along to now being the category leader. And when I look at the fact that workloads have shifted from people to machines. And in the era of agentic AI, it's only going to get even more so. We really need the ability to have a grown-up in the room supervising these agents 24/7, because they can and will go rogue if a little bit of sunlight is left there. A company like Zscaler with its zero trust platform is perfectly positioned to take advantage of that kind of an environment and that kind of a stance. And so I think it's a misalignment between understanding of what the opportunity actually is and what the threat is from Anthropic and Claude Code. Realistically, Claude Code is great at pointing to where the vulnerability is. It's not so great, at least yet, at telling you how to fix the vulnerability. That's where you still need human intervention from engineers at places like a Zscaler and elsewhere. And so in the world of agentic AI, that is where a Zscaler really has an opportunity to shine.
Well, the stock likes your commentary, and we'll follow that one because it's getting a move of about 2 1/3%. So Malcolm buys more of it on that huge dip yesterday. Worst day ever for that name. Real quick, then I got to go.
Well, listen, I applaud you. It's not only a market in which you just buy high and sell higher, to quote our favorite Joe Terranova. You're buying something that's been knocked down, and folks, you can do that. There are plenty of names that are still recovering from the lows. You know, we're getting a nice bump today in Oracle as an example. I think you sold that, but that's okay. You did a good thing with
Surprised
Zscaler.
it took you this long to get to Oracle.
No, I've been in it for 3 years, but the point that I'm driving at, up 6% today, is an absolute knock-on effect from what's going on with Snowflake. Yes, I know the data business is not what people think about when they think about Oracle, but that's why it's up today, and the hyperscaler business is yet to come in terms of the profits over the next 2 years. My point being is that you can buy stocks when they're down. You can. Good job.
All right, coming up next.